This reading outlines the legal context of running a non-for-profit business in Canada, taken from Chapter 7 of the Canadian Social Enterprise Guide. The entire basis of this chapter is how the Canadian Revenue Agency perceives and rules the charitable status of a non-for-profit business and whether or not it should be exempted from income tax. Okay, so here we go. It all starts with non-profit organizations. If the CRA concludes that they are engaging in excessive amount of business, it may subject them to income tax. Registered charity status. A non-profit may want to apply for charitable status for the benefits. In Canada, it is permitted for charities to carry on and generate profit from business activities that directly achieve or further advance the organization's charitable business. CRA illustrates a difference between a related and unrelated business. A related business is permissible, while an unrelated business is not. So how does the CRA decide that a charity is carrying on a business? It looks at reasoning for business, the potential to show a profit, the existence of a profit, and employee track records. If a company wishes to conduct a fundraising event, it cannot be a frequent event and should only be held to raise funds. However, it also says that an unrelated business can be run if the majority number, over 90% employees, are not paid. So basically, it all comes down to a series of questions that we need to ask about the business. Number 1, is the activity that the charity running a business? If no, activity isn't a business and is permitted. If yes, is the income earned through the sale of donated goods? If yes, activity isn't a business and is permitted. If no, is the fundraising activity carried out on a regular basis? If no, activity isn't a business and is permitted. If yes, are 90% of the employees volunteers? If yes, activity is a related business allowable by the CRA. If no, are the business activities linked and subordinate to the purpose of the charity? If yes to both, activity is a related business allowable by the CRA. If no to either, then the business is an unrelated business which could jeopardize the organization's charitable status and make them susceptible to paying income tax. In my opinion, this chapter does a thorough job in detailing the legal aspect of a non-for-profit organization, what the Canada Revenue Agency looks at to determine the legitimacy of the non-for-profit or charitable organization. It mentions everything from how the CRA defines a charitable purpose to the difference between a related and unrelated business. It's a completely factual chapter that simply takes the CRA guidelines and presents them in order of importance with underlying criteria. One thing that I really liked about this was a disclaimer made in the beginning, where it says that this chapter is not a substitute for legal advice, and that you need legal advice from a lawyer familiar with this field before you begin organizing or operating your enterprise. It's simply a heads up for anyone reading who may be looking for any gray areas or loopholes that can be exploited. In the end, the CRA has a heart and looks to give a tax break to any of those spirited individuals that are opting for less money and a bigger change.